We are perceived inside but also outside as a pure financial centers dedicated to fund, to alternative funds, to fund manager, managed services, bank and wealth management. We are much more than that.
Good afternoon. Today we're going to talk about Treasury. Delighted to be joined by the chairman of ATEL, which stands for the Association of Corporate Treasurer of Luxembourg. And he's also the chairman of EACT, which stands for the European Association of Corporate Treasurers. François Masquelier, good afternoon.
Good afternoon.
How are you doing?
Doing well.
Now, honestly, I don't know a huge amount about Treasury, which is a good thing that you're here, really. But what I'd like to know, certainly, well, one thing I do know is that it's all about cash, isn't it?
Not really. So it's an a priori about Treasury. In the past, it was mainly cash management, but today, and with the evolution of the function, and we will talk about that, the function is much more than cash management. It's also the relationship with bank. It's a management of the debt, it's management of all the FX risk, interest rate risk, all the financial risk as a whole. So it's a role that is more and more analytic and strategic, and so it's much more than that. We also have to keep in mind that we have a lot of interaction with the other department. We are really at the heart of the finance, let's say, department. So a very central position, a very key position with visibility on all the other departments. For example, for cash flow forecasting, for working capital management, etc. And given the current context, economic context, I can tell you, so after crisis, it's always the same. So the position, it's upstream, and we are closer and closer to the sea level. Another important factor after crisis, you have always a wave or a tsunami of regulation. Supervisors and regulators try to correct what went wrong and to prevent the next potential crisis. So we have also to face a lot of financial regulation. We can mention EMI, money market fund, PSD2, Basel III, etc., etc. So, okay, so it's also something we manage.
I mean, you mentioned the crisis there. One of the consequences of that crisis that even I'm feeling has been the high interest rates. From a treasury perspective, let's say you've got a really big organization with many millions of dollars in the bank. High interest rates, good news or bad news?
Good news, again, depending on your situation. If you are cash rich, of course, higher interest rate, it's good news because for 8 years, quasi 8 years, in euro at least in some currencies, we were with negative interest rates. So we were destroying value, something that we have never seen in the history, maybe Japanese and Swiss. But for us in Europe, it was something completely new. So the time was not creating value, but was destroying value. So it was something that we have never been taught at the university. So now we are back to a normal situation where we have a yield curve, rather flat, but still picking up what is a normal shape. And for banks, it's quite important because with negative interest rate, it was also penalizing the bank. And corporates could not survive without solid banks. Then you have the different situation where you are cash poor. If you are cash poor, of course, you need to borrow, and that's bad news because, of course, the interest rate will increase because you apply a spread depending on your credit risk on an index, a reference rate, and higher interest rate means that all in you have to pay more interest, especially in a very difficult and tough situation where the banks are tempted to take even bigger spreads. So you have the double effect of this increase. So I would say good and bad news. Good to come back to a normal situation or more normal situation. Bad news because it was extremely fast, extremely strong. We have high inflation, and the cost of debt and the service of the debt is more and more complicated.
I mean, you raised a really interesting point there about the relationship with the bank. If you are head of treasury in a corporate and interest rates went crazy as they have been, it must be important to look after that relationship so that you can have, for example, additional debt or loans if you need them.
Yeah, so it's quite important to consider that bank relationship is something that you need to manage. Don't think that banks are waiting for you. So you need to entertain an excellent relationship with your bank to make sure that the day it's raining, they will not open the umbrella, but try to give you the loan you're expecting. And so we saw that in the COVID crisis, where suddenly some businesses completely stopped. airline industries, for example, tourism, etc. So it was quite difficult. So it's important for the person to understand that managing the bank relationship is something that you not start doing at the moment of the crisis, in the heart of the crisis. You should do that with a long-standing, let's say, perspective, to make sure that the day you need to get the credit from the bank, they will still be there. So it's important also to share your business and your ancillary business with the different banks properly, to make sure that at the end of the day they are pleased by the relationship and they maintain the relationship. So it's something that you need to manage, and it's one of the duties of corporate treasurers to ensure that.
I mean, you worked in Luxembourg, didn't you, as a head of treasury for some time. Did you manage to maintain good relationship with your bankers?
I did, not only in Luxembourg, because we were multinational companies and we work across the world, but it's really important. And I've always, let's say, dedicated sufficient time to meet my bankers, to discuss, meet in person, not only virtually, but to meet them, to discuss with them, to prevent some problem, and to make sure that the day I need to act and to get some support from the bank, they were there for me. So it's important to make sure that you are not squeezing the margin of the bank, but we try to have a fair relationship where they take a certain margin and make money on you. It's quite important. And also not to multiply too far the bank relationship, to make sure at the end of the day that, you know, the pie is limited, so you need to make sure that the share of the pie will be proportionate to the business they give to you. So it's quite important to maintain that.
I mean, do you think here in Luxembourg we've got a really good understanding of the treasury function? I mean, we're a big financial centre, but I don't hear very much talk about it.
No, you just point out an important fact. So we represent the real economy. So banks are maybe the oil on the gear on the engine. We are the petrol. So it's really important to have the real economy. And I have the impression that in Luxembourg we are perceived inside but also outside as a pure financial center dedicated to fund, to alternative funds, to fund manager, managed services, bank and wealth management. We are much more than that. We have a unique ecosystem, that for sure, better than in Ireland, in Switzerland, in some other country. But I have the impression that we, let's say, grant a lot of attention to the financial sector, insurance company included, fintech, and we forget very often the real economy and the corporates. And my duty as chair of EACT and ATEL, of course, it's to try to broaden outside the small and limited frontier of Luxembourg the treasury function, to make sure that we are also perceived as a center of expertise for treasury. We have a lot of EMEA center in Luxembourg, a worldwide center in Luxembourg, and we have a real expertise in finance, but more especially in financial risk. And I think that it's something that we need to highlight more, and we expect to have more support from the government to not only promote the finance expertise, but also the corporate treasury expertise abroad.
Now, you said in your opening intro that you felt the treasury function was getting closer and closer to being C-level.
Yeah.
As the role of treasury has expanded, what about risk? Do you ever see heads of treasury also becoming chief risk officers in their companies?
Yeah, not always, not often. So we have discussed with our sister association in UK, ACT. They made some surveys. It seems that roughly it's less than 20% of corporate treasurers become chief risk officer. But when you think about it, the treasurer, it's a perfect, let's say, manager used to mitigate financial risk, all the financial risk, including operating financial risk related to the treasury operation and payments. So I think that we are well placed to manage the, let's say, entire, let's say, scope of risk. I mean the reputational risk, the strategic risk, and all operating risk of the company. Because we know how to manage the risk, how to assess and quantify the risk, how to mitigate by hedging, by reducing, by offsetting the risk. So for me, a treasurer should be more and more, let's say, moving towards a function like a chief risk officer and taking care of not only the financial risk, but other risk. Unfortunately, we are, let's say, technician and specialist of finance, and very often we are, let's say, limited to our scope and our silo, and that's a question of character, question of size of company. But it's definitely something that should emerge in the coming years, I guess.
I mean, we're almost out of time, but in your capacity as being chair of ATEL, if you had to say one message to the rest of the financial sector about treasury, what would it be?
I would say that, and especially when you compare the other industries I've mentioned the alternative funds, the fund services, the family offices in Luxembourg, the banks. I think that what I've noticed, treasury of corporate, let's say corporate side, multinational companies, we are far ahead in terms of technicalities, technology we use for managing the financial risk. And I keep thinking that we have a big gap, and we could certainly help this other industry to improve their bank connectivity, to have cash management tools, and especially with the higher interest rate. Now it's a concern for private equities too. So there, I think that we can share, and it's why we are trying to share this kind of expertise. We plan very soon to have with LPA, the Private Equity Association, some working group where we will try to explain what treasury means, to help the CFOs of these funds to manage better the treasury and to save money in a period where spread and margin are under pressure. I think is quite important. So we have certainly things to bring to the other industries, and I think that that's what we'll try to do.
François Masquelier, thank you very much.
Thank you, Jim.